All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you. And the first thing I want to talk about is a rug pull just occurred on Binance Chain DeFi project. They lost $31 million a day after launch. So good old Binance Chain. Nice and centralized, always doing the job, getting the job done. Just a day after launching on the Binance Smart Chain Decentralized Finance project, Meerkat Finance today put out a message saying that hackers stole $31 million from the wallets. However, investors think that something is afoot. They think that Meerkat's developers may have made off with the cash. The yield farming protocol put out a message this morning that someone had raided its wallets, according to a report from the block. Shortly thereafter, someone drained the project's vaults of $31 million in funds, $13.96 million in Binance's stablecoin, BUSD, and a further 73,000 BNB worth about $17.4 million. Since then, the project's Twitter account and website went offline, and its founders are unreachable, which has sparked allegations of fraud. Maybe the largest fraud project on the Binance Smart blockchain, tweeted Wu Blockchain, the prominent crypto Chinese blogger. A Binance representative told the exchange's Chinese Telegram channel that it's investigating the alleged rug pull and linked to a community support page, reported the blog. Decrypt reached out to Binance and will update this article with any response, which I doubt there's probably gonna be. Binance Smart Chain is Binance's proprietary blockchain. Critics say that it's decentralized, or that it's centralized, and thus not in the ethos of the technology's commitment to decentralization, since Binance can roll back transactions on the chain. However, if Meerkat Finance turns out to be a rug pull, that could turn out handy to investors who just lost their money to the one-day-old smart contract. Or is it Meerkat? I think it's Meerkat, right? Anyway, it doesn't really matter considering it's a rug pull anyway, so pronouncing it right is just a disservice to everybody who lost their money. While Binance puts out this fire, it must also put out several more to fight back allegations that many of the projects on its network are Ethereum copycats. Musical Beats, an alleged copycat version of Ethereum NFT project Euler Beats, also abruptly shut down earlier this week, not long after initially launching. Which I never really got the idea of Binance Smart Chain to begin with, because why not just have it on Binance? I never really got the idea of a centralized DeFi. It doesn't really make any sense, because if somebody's running it, then it's centralized, and then you have to, it doesn't make any sense. But either way, rug pull on the Binance Chain DeFi. Unfortunately, it is centralized, so they could probably pull all the transactions back, but again, it just doesn't make any sense to me why it even exists. Moving on here, state of Kentucky will give tax exemptions for Bitcoin mining. So the lower house of Kentucky has approved House Bill 23, which offers tax benefits to crypto miners. The approval means that cryptocurrency miners will be exempt from the usual 6% sales tax on power consumption in the state between July 1st, 2021 to June 30th, 2025. The new law makes it appealing for Bitcoin miners to set up shop in the state, as electricity bills are one of the biggest expenses for large-scale mining farms. Besides the above-mentioned bill, the Kentucky Senate, the upper house of the state legislature, is also pushing to pass Senate Bill 255. The second bill strives to bring additional tax incentives for mining firms that make a capital investment of at least $1 million. Kentucky legislators say they have been looking to attract technology investments from cryptocurrency mining and data center companies to create new jobs for the state. Which is all good. I certainly appreciate that. I think there will be a lot of people going to Kentucky now to set up mining operations. However, I think the legislators are a little bit naive, as cryptocurrency mining typically does not produce many jobs. In fact, you can have a big warehouse filled with ASICs and really only have a few employees to go around and unhook them, reset them, swap out broken ones, etc. That's basically the job, and it really only takes a few people to do that, depending on the size of your operation. So usually not a lot of jobs from that. But hey, I like crypto, so I support it anyway. Moving on, Iran officially plans to adopt Bitcoin mining to bypass international sanctions, which is just, yeah, it makes total sense. The Iranian President Center for Strategic Studies, in a detailed report, is encouraging the country to adopt Bitcoin and other cryptocurrency mining to bypass international sanctions. The center, with close ties to President Hassan Rouhani, wants the state to leverage digital assets' untraceable nature to outsmart sanctions. And so this makes a lot of sense because the Iranian electricity is actually extremely low. I've known some Iranian miners before, and the prices that they pay are obscenely low for their mining, and they were mining long after the 2018 bear market, where a lot of people were essentially shutting down their operations and buying, which I argued at the time. Now, of course, Ethereum mining is incredibly profitable, but I argued during 2018 that it'd probably be better just to sell all of your GPUs, and depending on, so some people had very large operations, it could be $10, $20, $30,000 worth of GPUs, and then just straight up buy the cheap $120 Ethereum at the time, and you would have bought a tremendous amount of Ethereum and likely would have more profit than you would see today by mining the entire duration. But fair enough, either way you want to do it. According to the report, extracting new cryptocurrencies can also provide economic benefits to several sectors. The center estimates that the cryptocurrency sector can generate $2 million a day and $700 million a year in revenue from mining alone. As the newly extracted bitcoins are not easily traceable, despite the pressure of sanctions on the country, domestic economic actors can use newly extracted cryptocurrencies, which are preferable to exist bitcoins on international exchanges. And this is true. Freshly mined bitcoins can be, and Ethereum, and maybe various other cryptos as well, but particularly Bitcoin and Ethereum, as are the most popular of the two, the largest of the cryptos anyway. And the idea is that a freshly mined Bitcoin has no transaction history whatsoever. So institutions and maybe even launderers or just individuals in general would actually pay a slight premium for those bitcoins and for those freshly minted Ethereum, because there is no transaction history tied to it. Now, moving on here to Dallas Mavericks now accepting Dogecoin as a payment. So the Doge phenomenon that has occurred since Elon and Satoshi Street Bets has pumped it is ongoing. It still has not ended at all. So Dallas Mavericks owner Mark Cuban is all in on crypto, making the media rounds for the past few weeks to talk up Ethereum, NFT collecting, and the myriad possibilities for smart contracts to disrupt software, insurance claims, and even NBA ticketing. Now, the franchise, which was the second NBA team to start accepting Bitcoin as payments a few years ago, has partnered with BitPay to accept Dogecoin as payments for tickets and merchandise. Because we can, said Cuban in a press release on Thursday. We have chosen to do so because sometimes in business you have to do things that are fun, engaging, and hopefully generate a lot of PR. So we will take on Dogecoin today, tomorrow, and possibly forevermore. For those of you who would like to learn more about Dogecoin, we strongly encourage you to talk to your teenagers who are on TikTok and ask them about it. So whoever's on TikTok, that's amazing. But either way, this is probably not a big deal for the Mavericks. Now, it's good PR. I think he knows what he's talking about here in terms of bringing Doge to the NBA essentially. And the idea is that since they're using BitPay, they're just going to get the fiat immediately for it. So they're not really necessarily hodling Dogecoin. And I don't like BitPay. I kind of detest them in the sense that they've put themselves in between peer-to-peer currencies, which could directly go to people. But hey, fair enough. However, you got to make a buck. But either way, they're going to be accepting fiat essentially. So they say they accept Doge, but if it goes to BitPay, then BitPay cashes it out and immediately gives the fiat to the Dallas Mavericks. So kind of true and kind of a lie. Moving on here. Co-founder of Floyd Mayweather promoted ICO sentenced to 8 years. If this sounds familiar to you guys, I actually made videos about this in late 2017 and early 2018. Basically, Centra Tech was a Visa/MasterCard. I can't remember which one. Maybe it was both. And it had a picture of Floyd Mayweather holding it saying, "I love my Centra card." And it also had DJ Khaled promoting this, and Floyd Mayweather actually got sued for this, and he had to pay a bunch of money. I'm not sure what actually happened to the DJ Khaled guy, but I remember reporting on this, and I actually found one of my videos where I had reported just one of my articles, because every time I make a video for news, I have a bunch of different articles in it as well. That's the way it goes. I take out all the crap articles, I throw them in the garbage, and I give you guys the good ones. And this was from May 16th, 2018, and in this video I was talking about how I previously had talked about the fraud that had gone on with Centrotech, and so I've actually made a few videos in the past, but now finally kind of comes to an end. Saurabh Sharma, the co-founder of the notorious celebrity initial coin offering of 2017, Centrotech, has been sentenced to 8 years in prison for his leading role in the fraudulent scheme that duped investors out of more than $25 million. Sharma had previously pled guilty to conspiring to commit wire fraud, securities fraud, and mail fraud for material misrepresentations made by him and his co-conspirators to solicit investors to participate in the scheme. United States Attorney Ilan Graf described Sharma as having led a scheme to deceive investors by falsely claiming that the startup he co-founded had developed fully functioning, cutting-edge cryptocurrency-related financial products. In reality, Sharma's most notable inventions were the fake executives, fake business partnerships, and fake licenses that he and his co-conspirators touted to trick victims into handing over tens of millions of dollars. The court found that Sharma and his co-defendants Robert Farkas and Raymond Trapani founded Centra around July of 2017, claiming that the firm offered a crypto debit card and other digital asset-related products. The group indicted an ICO, or conducted an ICO, from July 2017 until October 2017, distributing unlicensed securities in the form of CTR tokens. To promote the offering, the group issued materials falsely claiming the team had partnerships with Visa, MasterCard, Bancorp, money transmitter licenses in 38 states, along with the entirely fictional CEO, boasting more than 20 years experience in the banking sector and a master's degree from Harvard. While the team raised $25 million in the completion of the ICO, authorities found those crypto assets were more than $60 million at certain times during 2018. And the U.S. Marshals seized 100,000 Ether from Centra, which it sold for roughly $33.4 million earlier this year. The proceeds will be made available to potential use in a remissions program to compensate victims of the fraud. And they had celebrities DJ Khaled and Floyd Mayweather, who promoted the offering on social media, agreed to six-figure settlements without admitting in wrongdoing. So they basically were paid to promote it, this fake card. I remember the picture of Floyd Mayweather holding it, and it was real fun. We always have fun in the crypto world. So moving on to the next article, Bitcoin falls 4% as Fed's policies concern over rising bond yields. So basically, the other day I was talking about how everybody has been buying the Federal Reserve's bonds because the yields have been going up because of the whole stimulus package thing. And what that does is cause the stock market to start to go down. There's also a lot of FUD around the stocks right now saying that the tech stocks are overvalued and we're due for a correction. And with the falling stock world, the world of Bitcoin typically falls as well, the cryptocurrency market, as there is quite the correlation these days. And I brought up some markets here for you. The Dow is down by 1.1% today. The S&P is down by 1.34%, and the Nasdaq Composite here down by 2.11%. And we can also see the fact that in general, the price of crypto is down. Some of them up, some of them down. A little bit trading sideways for others, but overall the market cap is slightly down from the other day. So basically, Bitcoin's price fell by the most in a week after Federal Reserve Chair Jerome Powell acknowledged he would be concerned by tightening financial conditions as rising U.S. government bond yields put upward pressure on borrowing costs. The comments might signal more hesitation in providing fresh monetary stimulus. Bitcoin prices quadrupled last year and have rallied 66% this year on speculation the cryptocurrency could serve as an inflation hedge in the face of trillions of dollars of money printing by central banks around the world. Which indeed it could be. There's no reason it couldn't be. But with the fact that we have so much institutions and so many companies, and now, if Tesla buys Bitcoin and they put it in their reserve assets. As the price of Bitcoin falls, their stock falls. If their stock falls, it's going to kind of drag down Bitcoin as well. So the more we integrate Bitcoin into institutions, into companies with stock, the more Wall Street traders we have, the more they start using the same TA methods, the same selling and buying methods as the stock world. It's gonna start to leak over to the crypto world. And when we had the COVID shutdown in March of 2020, the stock markets crashed something pretty fierce for a short period until the stimulus came out, and so did Bitcoin as well. So it's getting pretty correlated with each other, and I'm not sure if it's a hedge anymore. Now, is it going to be a hedge over time? I think so, but I think in the long term, cryptocurrency typically is moving with the stock market a little bit, and it's not entirely correlated. It's not moving dollar to dollar or anything like that, but I think over time, indeed, it's a hedge. As millions of dollars get printed, as trillions and trillions of dollars get printed, yes, it makes Bitcoin more expensive as the US dollar buys less of it. The perfect example is something like Venezuela, where the inflation was so incredible that money was just all over the streets, that people were basically paying thousands upon thousands of bolivars for a chicken or for bread or any kind of food product, basically having to pay thousands of dollars per item. And in that case, Bitcoin is indeed a great hedge against inflation. But what happens in that segregated area, in that segregated economy, if you will, then yes, Bitcoin is indeed a hedge as Bitcoin is going up and the bolivar is going down. Quite so. But if the entirety of the stock market crashes in the United States, it'll crash the UK, it'll crash Europe, and same with Europe too. If Europe crashes, it typically will crash the United States and the rest of the world. So let's see what happens with Bitcoin at that point. Is it going to rise during a major stock market crash or depression, or is it going to fall with the rest of the market? Or another possible scenario is that it falls with the rest of the market, but people start to realize, hey, Bitcoin doesn't need to be falling with the rest of the market. We can put our money there and then it will rise from there. But we'll have to see. As Bitcoin was invented in 2009, we have never seen a stock market crash with Bitcoin at all. We've basically seen a bull market virtually the entire time that it has existed. It has never gone through any kind of economic crisis. So we'll have to see how it performs with that. But moving on to CoinMarketCap, 1.4 trillion market cap, $47,000 Bitcoin. So we got up to like something like 50,000 and then just kind of dipped from there back to $1,400, $1,486 Ethereum. But other than that, nothing particularly special. But that's all I have for you guys. Make sure you subscribe to the channel, like the video, share the video. It helps me out a lot. My social media is in the description below. Give me a follow on those if you get the opportunity to do so. And as usual, I will see you guys next time.